Hello everyone, this is Philip at the Laptop Trader. Thanks for coming back to our community. I'm here to share my experience, give back to the stock investing and trading community, one video at a time. Thanks for watching, liking, subscribing, and sharing. Again, my contact info is laptoptraderphil@gmail.com, or you're welcome to leave a comment on the video. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. So start now if you're new to the stock market by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets, just like any other industry. So this quick video is going to be a quick one because we've had this bear market over the last 3-4 months. And what am I doing now to search for new stock opportunities? This is a great time. Please take my word for it that it's a great time to research stocks and get your plan together, get your stuff together, get some money together, and come up with some ideas for the rest of this year. Okay, so what do I look for? I'm mainly looking for technical price action, and preferably if I can get that action backed up with some fundamental reasons for buying the stock and or a theme or something that's hot right now. Okay? That's basically what I'm looking for. How many stocks do I scan? I'll scan through hundreds of names very quickly, okay, using charts. How will I know if the stock is the right one for me? Well, you will know from practice and noticing differences in charts and fundamentals over time and by coming up with and writing out your trading or investing plan. So everything I'm sharing with you in these videos is part of my trading and or investing plan. Okay, so you just have to come up with a plan of attack because there's just thousands of stocks and you have to sort and segregate the market as far as to what makes sense. Okay, essentially we're looking for stocks that are growing. Growth is the number one word on Wall Street. Okay, but we also have to take into consideration as a stock trader or investor in individual stocks, right? What is weak, what is strong right now, and what is the market context? What is the market situation? What's going on in the markets? What's going on in the news at this time? So what are the main topics in the news right now, right? New president and trade tariffs and possible trade war. Can we get along with our trading partners? Inflation is still part of the news. Interest rates are always part of the news. Employment generally is part of the news. General business and economic conditions, that will be part of the news. So when we look at these charts, we can see a lot of that in the charts, right? We can see this downtrend, and we had kind of this, this major selling, then major buying, and then now we're kind of in this consolidation area over the last 8 days. But overall, in the near term, the market is still in a downtrend. We have not even made a higher pivot low. We've made some new higher lows on a daily basis, but not a higher pivot low yet. So the market is still in a near-term downtrend, and that's across all major markets that we follow, including the S&P 500, the NASDAQ index still in a downtrend overall, Russell 2000 small cap index still in a downtrend overall, even though today was a good day for Wall Street. Same thing with Dow Jones, industrial average still in downtrend overall, and transport still in a downtrend overall. So the context of the market is downtrend, so we need to keep that in mind. Now, within these downtrends, you can have rallies. We can have some stocks that are performing better than others. So I want to share with you guys today, what am I doing for my research? How am I finding new opportunities? And one of those tools that I use through barchart.com is every day I'll get lists emailed to me of things like today's new top 100 stocks. Or I'll get a list emailed to me with something like percent changes, right? So I can check this, and this list is sorted by ranks stocks by the highest daily percentage change, okay? And this list rates stocks by weighted alpha. So what is weighted alpha? Well, weighted alpha is simply a measure of how much a stock has risen or fallen over a 1-year period with a higher weighting for recent price activity. So it's kind of like not a ratio, but just a way to quantify how well is the stock performing over the last 52 weeks. And essentially, this list is one of relative strength. So a lot of these stocks in here are going to show some nice relative strength. And when we look at, let's just take a weekly chart so we get some better context on this, you can see this has been a very strong stock over the past 3-4 weeks. I would never buy this now because to me it's too extended to buy. If you bought this now, you may be setting yourself up for a loss. But just as an example, right? That is one that's showing us the highest alpha over the past 52 weeks. Here's the next one on the list, showing a pullback to a major moving average, and then kind of has been bought up over the last 3 weeks. Again, not super attractive to me. I'm looking for tighter price action than that. And so far, all these first few stocks, I don't really see it. This one looks okay. This is a gold-related stock, so gold has been hot over the past month. And that's kind of consolidating here towards the highs. That doesn't look too bad. WGX, that doesn't look too bad to me. But I'll just kind of go through these charts and I'll say, okay, what looks good, what doesn't? What can I put in my watch list? And if I come across something that I really like, then I can immediately take this name. Let's say I like this name. Amber International Holdings, symbol AMBR. So I can take that chart and I can add that to my watch list, right? I can just go over here to this week's list or whatever list I want to put it in. I can just type the symbol AMBR. Okay, hit return. Now Amber has been added to the bottom of the list, right? And so these different lists give me different parameters that kind of sort out some of the best performing stocks for me. So here's a list of stocks making new highs, right? I can go maybe a weekly or daily chart. I could say, okay, that's kind of moved too fast. This one is still consolidating. Pharmaceutical company, health company. Big long consolidation. Definitely has volume coming into this stock for sure. Average volume is less than probably 30,000. All of a sudden you get days of big volume in the millions. So this is just a big fat stage 1 consolidation, but daily it'll have these big moves up all of a sudden. So here was a big move up, then it pulled back, then it moved up, pulled back. Again, now it's gapping up again. So one of the things you learn about stocks is they'll have personality. So this, I would expect this to kind of retrace. But let's say I like it. I can take that symbol, TIVC, okay, and I can put it in to my watch list. And now I already have a list, right, that's been pre-sorted for the week or the month or whatever. And now I can start looking through the charts on this week's list and say, okay, we've already went through all the harder research part. Now we're going to start getting maybe some real opportunities here. Okay, and I can just go through these and I can quickly see what looks good technically to me. And then we can pick one out to research, right? So a lot of stuff is still in a near-term downtrend. So this one looks good to me, Celsius Holdings, right? So what do I like about this chart? Well, this wasn't a downtrend, and then it kind of was bought up in earnings. You can see the volume come into the stock during earnings. Had a positive gap after earnings and then sold off. Then since that time, it went sideways for a few weeks. I like that it consolidated right here, these 5 days. I like volume dropped, the volume came into the stock, and right here was a pretty good buying opportunity for Celsius Holdings, symbol CELH. I like the consolidation. I like the volume went down. I like it's at these moving averages. I like it's above the previous lows. And I like this expansion bar here, where price expanded out of an area of contraction. And you'll find out stocks will move up, contract, pull back, then expand, then contract. And right now, Celsius is in another contraction period or another step. So if you visualize this as steps, we had a step up, sideways, we're on that next step. It's been in this next step for probably the past 4 weeks at least, and today it made a new high. So I really like that it just made a new high. So I like most of what I'm seeing with Celsius at this time. And now I like it technically, right? You can see all these moving averages are pointing up. I like that. So now let's look at some performance stuff, some fundamentals. Performance, okay? 1 month, it's gained almost 15%. 3 months, it's gained almost 50%. 6 months, it's gained 18%. So most of these gains in the stock have come over the last 3 months. 1 year, it's negative. 3 years, it's over 100%. 5 years, look at this number, 2,200%. So this one is a growth stock. I like that. Any news right now in Celsius? Not much for news. But news is kind of, I take news with a grain of salt. Market cap, 9 billion. Annual sales, 1.3 billion. Annual net income. Last quarter had negative net income. I don't like that. 1, 3, and 5 year return. Here's why Wall Street is paying up for the stock, because of this revenue growth. 1,700% revenue growth. 7,000% earnings growth. That's why Wall Street likes this stock. Wall Street loves growth. Price divided by sales, 7 times sales. That's kind of high to me. But price divided by cash flow, that's also kind of high. PE. I like that PE forward is coming down. I like PE to growth. PEG 1.06. I like that a lot. Around 1 is a good number. Return on equity is very good. Return on assets is very good. This ROE, return on equity, over 20% is very good. Profit margin over 10%. So all this looks okay. How about per share? All right, most recent earnings, 14 cents per share. Next earnings date, May 6th. So that'll be a key date. Some traders choose to hold on through earnings. Some traders choose to not hold through earnings. That's a choice you have to make. Earnings are very volatile. I don't like this negative earnings per share growth versus the previous year. I don't like that. And then, if you don't know anything about the company, what is Celsius? Well, they're part of the bottled and canned soft drink sector. They specialize in commercializing healthier, nutritional, functional foods, beverages, and dietary supplements. Celsius Holdings markets Celsius, the calorie burner, through its wholly owned subsidiary, Celsius Inc., and they're based in Florida. So it's a beverage company, maybe kind of like a nutrition company, but I like the price action here, but it's just consolidated. So that, right, we can see where price expanded and pretty wild, and now price has kind of calmed down. That's what we're looking for. I like several bars in this consolidation. I like this red bar getting sandwiched. I like that consolidation. So that looks pretty good to me as far as that goes. Okay, so what else can I share with you guys? Anyway, that's kind of how I sort and segregate what I'm looking for as far as new opportunities go. So I'll look for new 52-week highs. I showed you that. I will look for other lists. I will compare those stocks to the overall market, right, using these ETFs, SPY, the Qs, IWM are the 3 main ones, the Dow Jones, The transports, those 5 are very helpful in getting market context. I showed you, this list, which comes from this, the top 100 stocks to buy, again based on weighted alpha. I showed you what alpha is about. So these lists just give you somewhere to start, and then you can go from there and get an idea of some future buying opportunities. So one more thing you can do. Let's go over this real quick. Let's go to this company, okay, Cardinal Health. This will just be an example. This is not a recommendation or anything like that. But Cardinal Health is a big company. Okay. Recently, they've been in a sideways trend. Longer term, they've been in a nice uptrend, nice steady Eddie uptrend. Okay. And one thing you can do with a stock that if you really like it and it's a major company and you have the cash to do it, okay, you can sell what's called a put option. Put option obligates you to buy a stock at a price that you determine when you select the put option strike price. So today, Cardinal closed at 133.69. Okay, so let's look at some options info on Cardinal. This would be an alternative strategy to simply buying the stock, right? And we can take and we can look at news on Cardinal. We can do some research on Cardinal Health. Now here's the article, what you need to know ahead of Cardinal Health's earnings release, and then it goes through, gives you some little bit of information on that. About earnings history and earnings reports. Here's the interesting part I liked about this article and I like about Cardinal in general. Cardinal Health has climbed 29.5% over the past year, past 52 weeks, outperforming S&P 500, which had a 5.2% gain, and the healthcare sector with a 3.5% drop. So Cardinal is outperforming the market and its peers and its sector. So that's showing some relative strength for Cardinal just by looking at that article. Now, let's say you like Cardinal, but you don't like this price for Cardinal. You can essentially try to name your price by selling options, specifically selling a put option. This would be called a cash secured put option. Now, we can look out. We have earnings coming up in May for Cardinal. We can look out. This will be the expiration. Options have an expiration date. So this option table will have options expiring on May 16th. And the M means it's a monthly option. Okay, so this will be expiration of that date. That's 24 days away. Okay, and we can look at put options to see what can we use to name our price. So we can go down these puts. Again, today it closed at 133 point something. So anything above that price today would be considered out of the money. I'm sorry, in the money. Anything below that would be considered out of the money. Well, if we're going to sell a put option and we're going to name our price, we would want to name a price less than 133.69. So let's just go down. Let's just say we look $10 below where the stock is currently trading at. Okay, that would be $10 out of 133 would be about maybe it'd probably be about 5%, give or take, if my math in my head is correct. So let's say we want to buy the stock 5% below where Cardinal's trading at today. And that would give us, according to Delta, which measures the sensitivity of an option, it also measures, it's a bit of a probability indicator. So a 0.23 delta would give us about a 23% chance that Cardinal would close at or below 123 in the next 24 days. Okay, so if we sold the 123 strike and we got the mid price, so there's bid, mid, and ask. Okay, if we were to sell it for the mid price of 253, let's just say we put in an offer of 250. Okay, so now we can do some quick math on that. So if we sold that option for 250, which would give us a $250 credit, and we divided that, okay, by our risk of 123, which is actually times 100, so options are always times 100, we would receive a credit for 250, which would be about 2% of that option's value. So that's not too bad. So you get a 2% return or 2% yield over the next 24 days by agreeing and getting paid to agree to buy Cardinal Health shares at 123. So that's not too bad of a trade-off. Okay. Now let's say that's too close for comfort. Let's say you don't like that. Okay. I don't want that. Let's say that's too close. Let's say 123 is too close for you. You're just thinking, I don't know. Okay, so we can use delta to get something that's lower probability of actually getting filled. We can go down to somewhere like here. We use a 10 delta, which gives us about a 10% chance of getting filled. We could go to this delta, which would be about a 14% chance of Cardinal closing at or below 120, right? There's also a lot more open interest at 120. And if we sold this option, we would get, if we were filled at the mid price, let's say 1.13 divided by 120, let's see what kind of yield that would give us for agreeing to be obligated to buy the shares at that price. That would give us 113 divided by 12,000. Okay, that would give us only a 0.9% yield. So, but it's only for 24 days. You could set your price that you like to buy, So that's a little bit more of an advanced strategy. That's called a cash secured put strategy. Essentially giving you the obligation to buy shares at the strike price you select, and you get paid to wait for that period of time that you agreed to, in this case 24 days. And if Cardinal Health were to close at or below that strike price, yes, you would be obligated to buy the shares. You would be obligating yourself to buy 100 shares at that lower price. But that would be a significant discount over where Cardinal Health is trading at now. So that's a little bit of an advanced strategy that I thought I would throw in there for you. Let's wrap up the video with that. Again, I've got my watch list. I sort and segregate the stocks, put them in a list, and then I go from there. And I start coming up with strategies to help me profit from the market. And in doing so, I create confidence for myself. Okay? So that's what I use to scan. That's what I'm doing right now to search for new stock opportunities. Again, thanks for watching, liking, sharing, and subscribing this channel. Again, most stock traders lose money. Please protect yourself at all times. That'll do it for now. I'll see you guys in the first week of May for the next stock market update. Take care. Bye.